Good morning, traders. It's Monday, March the 4th. Taking a look at the charts, we'll start off with the SP 500. Now, more or less, on the left-hand side here, we've got the 30-minute chart of just regular trading hours. Each of these vertical lines here is one trading session. So this here is one trading session, another trading session. We got into an oversold territory a few sessions back. It's popped up. We actually got above this red hashtag here, which is indicating a short-term overbought. The market actually gapped higher into this overbought market, sold back down to fill the price gap, and then came back up on Friday. Overall, we've got a short-term bias to the upside. Today, we could start to see the market kind of top out with a little cycle top here, and we're also coming into this previous pivot high. Stocks are set to gap up. You can see we had, let's just zoom in on this chart a bit over here. You can see here we had the market pop up, sell back down. It's coming back up to flirt with this significant resistance level here where we talked about it might pop and pierce these pivot highs. A lot of times the market is always going to make a nominal new high or a nominal new low just before it reverses. So today we're piercing that level. We might see it push a little bit higher. We are gapping up. We're going to gap into overbought territory, likely going to get sold into. If we looked at the overseas markets, the DAX, all those other indexes, they all gapped higher in overnight trading and sold down throughout the rest of the session. So most likely going to see selling come in here, and we're going to continue to see kind of volatility where price comes up, drops, pops back up, and eventually we should start to see this roll over with a sharper correction. This has been a very strong, steady grind to the upside. When it starts to unwind, there's going to be a lot of pivot lows in here that are going to trigger some selling. So once we start to see price start to fall, we're going to have each one of these nominal new lows. When each one of these is broken, it triggers a wave of stop orders, people who have their orders in place. And more or less, there's a bunch of different levels across here, but the closer they are together, the sharper the drop. So when you have a bunch really close together, when one triggers one and creates a wave of selling, it makes the market fall even quicker and further. And if it breaks another one, it creates another flood of sell orders and so on. So we'll see what happens with the markets over the next couple trading sessions or the next week or so. We should start to see this become more and more insecure, choppy, and eventually we could start to see it break down and have a fairly decent correction, and we'll see a spike in the VIX. Now, if we take a look, let's take a look over at bonds. Money has been flowing into into stocks and out of bonds, kind of moving down. If we were to throw a Fibonacci extension on here to get a target, here's the high, here's the low. This is where the downside target is for bonds for just the simple Fibonacci momentum move. You got the sell-off, you've got the rebound, and then this would be the next downside target. So not a whole lot more downside for bonds. It's going to coincide with this pivot low, this little consolidation that was over here. And that would be a full measured move. Maybe if this gets down into this area, that could be the time when the equities market is really starting to top out and getting closer to a reversal. Now, if we take a look over at, let's take a look at the dollar. The dollar, we've been talking about this. Let's go to the dollar index chart here. I'll pull this up. Dollar index chart. More or less, it is on a steady climb. It's had a rally, consolidation, and we do expect it to try and break these pivot highs over here around the 97.50. Potentially, it could continue to string and run up to the 99, maybe even the 100 mark. Going back, which is a key resistance level back in time, which would continue to put downward pressure on precious metals. If we look at the weekly chart here, you can see this area, the 100 mark across here, very significant pivot zone in the market where it acted as a significant high in the past. Several times it did have a breakout, found support, and eventually just traded through it and then broke down. So this would be the next very significant resistance level. If the dollar does climb and run up there, we're probably going to see precious metals have a much deeper correction than a lot of people think. And we've been talking about that for a couple weeks already. Looking over at gold down 0.75% this morning, continuing this kind of waterfall sell-off. It is picking up speed. There is big volume. If we look at our 30-minute chart here, we did get into an oversold territory, but we've been expecting a bigger, some bigger downward bias in gold. The last trading session on Friday, the bars went orange. When they go orange, they typically go red afterwards. And so we are slowly out of the bullish bias now. We've gone more or less neutral to bearish for gold, and we could continue to see this unwind and have a much bigger sell-off than a lot of people think. So if we take a look at the price action, you can see the last time price rallied up into this zone. Let's just zoom back a bit here. Rallied up into the zone, big sell-off, rallied back up, big sell-off, and we've rallied back up and we're starting to sell off. We could get into, we talked about this many times here, that we could be getting into this big volatility stage. Here we are right here getting into a big potential topping stage where price continues to swing around. We have these huge pops and rallies, very tough to trade. We are getting oversold. We are getting down into support. I would not be surprised if we get a nice bounce and potentially a week-long rally here in price. But overall, expect some huge volatility, and we never know. It could still break down eventually, or it could just go into a landslide. Again, we never really know. But at this point, we are bullish long-term on precious metals here. But overall, it is getting short-term overbought, or sorry, oversold, and I think we should be starting to look for some type of bounce in this level. But again, I think it'll be short-lived, and we're going to continue to be in a big choppy range, just like we've seen over here. Looking at silver real quick, silver down 0.75% as well. You can see it, let's zoom in a little bit more. It's really doing some damage, breaking a significant pivot low and more or less the second significant pivot low. It actually has a momentum move now to the downside, which technically, when you break two previous pivot highs or lows, this one we have we've broken two of these levels. So now on the first pullback or pause, it's actually an opportunity to get short, and it actually points to much lower prices for silver at this point. We'll have to see how things unfold, but that's where we are with silver. It is a much more wild card than gold and miners. Now let's take a quick look over at miners, GDXJ. It has only broken this first level here. So again, it's getting oversold. It's gone vertical to the downside. Usually when something goes straight down on a big day, usually we see it recover and rebound. Today, miners are set to gap lower, but we do actually have, if I just stretch up the intraday chart here, you can see we actually have a spike in GDXJ to the upside today. That means they could easily open lower and rebound and have a fairly decent rally today. So there is a spike kind of signal on the GDXJ this morning to the upside. Looking over at, let's pull up Bitcoin real quick. Bitcoin down 3% this morning. I'm just going to move this 30-minute chart out of here for now. Bitcoin does have green bars here. It is trying to find support. It is selling down. It hasn't broken out of this pattern yet. Again, if we were to draw a line across these, whoops, wrong tool, across these highs here, you can see here we're still stuck under this pattern. We've gone from a sell-off to this more or less no one's interested in it, just a kind of a slow bleed out. We're starting to get these get ready spikes where price is moving up. We're starting to see some volume spikes in price. So there is some life coming back into it. You can argue the momentum is trying to get up here, but it is at the 20-day moving average. It's at a previous pivot low. We'll see if it can start to break and move up here, and from there it could have a very strong run. But at this point, it still has yet to show any signs of really breaking to a new uptrend. Looking over at natural gas, up 0.8%. It is moving up, continuing to climb up this 5-day moving average. We played this move when it came down here. We played this bounce right up to these 2 days here and got out for 25-30% gain. Since then, it's kind of pulled back, and now it's back up to those levels again. Overall, it does have potential to pop and have a big move. We took that play. I don't really want to get into it. I think at any day we could see a very sharp drop in natural gas. We took the quick technical play, and now we're just going to let a new setup form there. Looking at crude oil, continuing to consolidate through these blue support and resistance areas. Overall, still in an upward bias. We'll see which way it breaks going forward, potentially get into a trade. Anyways, that's it for this morning. Talk to you in a bit. Bye-bye.